A soft landing surprise. Did that chance just increase today with a jobs report some are calling Goldilocks? Let's ask Solus Alternative Investment Management's Dan Greenhaus. He's with me here at Post 9. It's good to see you again. Welcome back.
Thank you for having me.
So your view kind of where we are, and I guess it could be a tale of two markets in a single day. Things seemed pretty good after the jobs report. Then we got the headline out of Europe with Nord Stream, and the market rolled over and rolled over hard. What do you take from it?
So with respect to the jobs report, I mean, listen, in the short term here, that was, from the Fed standpoint, pretty good. Obviously, wages came in a little bit, job growth slowed a little bit, although admittedly, 300,000 jobs in any given month is still an extraordinarily strong level of job growth. I took a look before I came on. In the last 40 years or so, only 10% of months or 11% of months have had job growth stronger than this one. So it's still a relatively rare occurrence, but relative to what we've seen the last few months, it's come back. The Fed has to be happy about that, and I think the market probably reflected that in the short term.
I mean, you need the economy to hold up pretty well. I know this sounds so perverse. Not well enough, right? You need it to hold up so that you have a cushion for what the Fed's doing, so it makes the soft landing idea more plausible.
Yeah, so listen, there's plenty of people on the network talking about how the only way out of this is a recession. That's not true. There's people on the network saying the Fed needs to cause a recession. That's not true. There is a plausible way out of this. I don't think it's the likely outcome of we've been discussing for quite some time now, but there is a plausible way out of this where the economy glides, so to speak, down and inflation comes down thanks to supply chain pressures easing and the like. Again, I just don't think that's a likely outcome. But the point I would make about Goldilocks, which has been the type of thing that we've discussed all day, or the network has discussed all day, one report does not a Goldilocks make. This is a process, and as I was speaking to your producers about, you have to think about the U.S. economy as a Titanic-level ship, or a cruise line ship today, which is infinitely larger than the Titanic then. It doesn't turn on a dime. It doesn't stop on a dime.
Freudian slip, citing the Titanic.
Sure, but it is a large ship.
We hope we're not going in that direction.
No, we do not.
But iceberg dead ahead, no.
It is very difficult to say you're going to turn only 2 degrees this way and not go 3 or 4 degrees, or some nautical analogy that I don't have. And so the idea that we have a Goldilocks jobs report, fine, but this is a process, not an event, and come talk to me in 6 months.
But see, one of the reasons why, you get some calls for inflation to be higher for longer and then rates higher for longer are the very reasons that we reacted, the market today, to the Nord Stream headline. Geopolitics, this is a smack in the face that says we're still out there.
Sure.
Geopolitics remain a huge risk to the story globally, and it's inflationary.
Sure, and there's 2 points there. One is inflation higher for longer. Make no mistake, inflation was on a year-over-year basis was always going to come down. That was never a question. The issue always was to what level. Even before the huge spike up to 9%, the issue wasn't, is it going to go up, is it going to come down? It's to what level are we going to fall? I believed, and a lot of people believe, that when you fell and came off those peaks, you would be at a higher level for a host of reasons that's too long to discuss now. That remains in place every bit today as it did a day, a week, a month ago. The Nord Stream headlines are of tangential relevancy, but more importantly, they are an issue for growth than inflation. Obviously, higher nat gas prices throughout Europe, inflationary, but more directly, let me say it another way, Europe's in big trouble. From an economic standpoint, Europe is in big trouble.
People say a recession's inevitable.
I don't think
it's a matter of when.
I don't think there's any way that you don't have a recession. The only question is how deep. Now, just getting back to the inflation side of things for a second, you're talking about above 10%, maybe 15% inflation in the UK, something a little less than that in Europe more generally. But again, you've shut off gas flows, and as Josh Brown noted appropriately in the halftime show, you were only at 20% of flows as was.
Right.
But with flows at zero, the analysis is that they basically don't have enough gas to get through the winter, which is obviously a humanitarian story.
I mean, there is a point of view, and, it may be in the minority. It's still loud, though, from the likes of Tom Lee, who's, by the way, coming up in just a little while, Jim Lebenthal, Barry Bannister, Stifel, late this afternoon. We see much lower back half 2022 inflation and no U.S. recession until the third quarter of 23, which we believe supports 4,400 for the S&P 500 at year-end 2022, led by big tech. So leave the led by big tech out of it for a minute, but this notion that inflation's going to roll over hard, the Fed is not going to have to be as aggressive as they sound. and thus that could be stimulative for stocks in the latter part of this year. 4 months left to go. Does that make sense?
Of course, that's the threaded needle idea that's been around for, and I don't mean that disrespectfully, but that's what everyone's been arguing for 6 or 9 months.
Right.
It's a perfectly plausible outcome.